1.3422 is the level where the pound's hawkish Bank of England story collides with a raging oil-driven dollar. Here's the danger. A false breakout above this resistance can liquidate every late long in seconds. But a 4-hour close above it? That unlocks 1.3441 and a potential melt-up. I've got 2 scalp plans to trade the rejection or the grab, and 1 swing plan for the trend continuation. My session bias is a bullish trend continuation with an immediate fading risk at resistance. The market is a strong buy on the hourly and daily timeframes, but we've drifted into overbought short-term conditions. That means the path of least pain is higher, but the entry is everything. The single number that flips the entire structure is 1.3327. Write this number down. If we get a daily close below 1.3327, the weekly trend structure resets and we are looking at a move back toward 1.3270. That's your line in the sand. Right now, the herd is positioned heavily long, expecting a clean break. That's dangerous fuel. When everyone sees the same breakout, the market has a habit of grabbing that liquidity first, trapping longs, and then moving higher. That's the playbook I'm trading. Let's walk the charts from the top down. On the weekly, the trend is a clear buy. We are above the 20-week moving average and we have carved a series of higher lows since that 1.3150 reclaim. The MACD on the weekly is positively stacked, no bearish divergence. This is the backbone of my swing bias. On the daily chart, the trend is strong buy. The daily 20 MA is at 1.3324, and we are trading over 80 pips above it. The 200-day MA sits at 1.3371, and yesterday's close above it was the trigger that accelerated this leg. The daily MACD histogram is still printing green bars, but the signal line is flattening. This is not a full-blown bearish divergence yet, but it's a caution light. Drop to the 4-hour chart, and that's where the picture gets tactical. The 4H20 MA is roughly at 1.3380, 60 MA at 1.3350, and 200 MA at 1.3320. Price is extended above all these, which confirms momentum. But here's what most traders miss. The RSI on the 4H is above 70 in some sessions, and the Williams %R is sitting at -2.94, extreme overbought territory. That does not mean sell, but it does mean that buying here with no filter is a novice move. The CCI at 126 confirms the extension. I'm watching for a hidden bearish divergence on the 4H MACD where price makes a higher high but the MACD line fails to follow. If that develops, it's your early warning that the correction into 1.3384 to 1.3365 pivot is coming. Now the 60-minute chart for fine entries. The 1H20 MA is around 1.3390. The 60 MA near 1.3375. Price is grinding along the upper Bollinger Band, and the ADX is at 27.7, trending but not explosive. That's a grind, not a launch. So I want to see either a clean pullback to a dynamic support or a structural breakout with a retest. The key daily resistance cluster is a 1 at 1.3384, which we've already punched through, R2 at 1.3422, and a 3 at 1.3441. Support beneath us, 1.3327 is the daily S1 and the 20 MA convergence. Then 1.3308 and 1.3270. The pivot point sits at 1.3365. If price loses that pivot intraday, the session bias turns neutral and the scalps get aggressive to the short side for a quick fade. The 24-hour core news says it plainly. Pound eases as Fed, oil-driven dollar bid ways. But here's the nuance. Cable is still up on the day. That tells you the underlying bid from Bank of England policy expectations is absorbing the dollar pressure. The market is pricing in tighter policy from Threadneedle Street, and the UK gilt yields are holding a premium over bunds. That yield differential is the invisible hand pushing this pair up. The risk to the trade is a further spike in oil that reignites inflation fears and forces the Fed to sound hawkish again, boosting the dollar across the board. If WTI crude pushes through $85, that's a crosser set red flag for this long. But as long as the bow remains on track to stay restrictive while the market doubts the Fed's next move, the path of least resistance is up. My 1 to 2 week directional lean is bullish, targeting 1.3441 and potentially 1.3500, but only if 1.3422 is absorbed. The invalidation for this medium-term view is a weekly close back below 1.3327. Do you think the dollar index breaks 105 this week? Comment yes or no. I'm tracking consensus because a DXY breakout above 105 would put massive pressure on this setup. Most people skip this section. That's exactly where the money is made. Keep watching. I'm giving you 3 plans, 2 scalps and 1 swing. All numbers are precise. Every trade has a stop and a reason for being there. Strategy 1, the opening scalp, scalping, high probability. This is your fast snipe off the most obvious intraday support during the London or early US session. We know the 1-hour trend is strong buy. So I want to buy a pullback into the pivot and the 1H20 MA convergence. Price action setup. Price drifts down to tap the 1.3375 to 1.3370 zone. That zone aligns with the 1H60 MA and the daily pivot. On the 5-minute chart, I need to see a clear bullish engulfing candle or a pin bar rejection with a low wick right at that zone. Entry on the break of that 5-minute engulfing high, around 1.3375. Stop loss goes at 1.3360, tight, 15 pips below the level and below the intraday liquidity low. Take profit 1 is set at 1.3400, a clean 25 pips for a 1-minute and 1.6 seconds risk reward. If momentum rips, take partial profits and hold a runner to TP2 at 1.3420, just in front of the daily R2 resistance. This scalp is void if the 5-minute candle closes below 1.3365 before your entry. That signals the pivot is failing and you step aside. Strategy 1, the opening SELP entry, 1.3375, 5M bullish engulfing after tap of 1.3370 zone, stop loss. 1.3360 take profit 1, 1.3400 take profit 2, 1.3420 risk, reward, 1:1.6R to TP1, runner to 1:3.0R invalidation. Void if 5M candle closes below 1.3365. Strategy 2. The liquidity grab, scalping, counter. Noise. This is a classic stop hunt fade at the 1.3422 resistance. The location is perfect, just above the round number and the daily R2, where breakout traders will place their buy stops. I want to see a false breakout. On the 15-minute chart, price spikes above 1.3422, maybe wicks up to 1.3430, and then immediately reverses with a strong bearish engulfing 15-minute candle closing back below 1.3420. That's the liquidity grab. Entry is on the close of that engulfing candle, or a slight retest of 1.3420, with a sell entry at 1.3418. Stop loss is tight at 1.3435, above the wick of the fakeout. Target is the nearest intraday liquidity pool, which is the 1.3384 level. That's the broken resistance turn support, R1. That's a 34 pip target. Take profit at 1.3385. Risk reward around 1:2. This strategy requires fast execution. If the 15-minute candle after entry does not push lower within 2 candles, cut it. The trap is set when the breakout fails. You must be ready to act. Are you scalping or swinging this week? Comment scalp or swing. I want to see where this community sits. Strategy 2, the liquidity GRAB entry, 1.3418. 15M bearish engulfing close after false break above 1.3422, stop loss. 1.3435 take profit 1. 1.3385 risk, reward. 1:2.0R invalidation. Void if 15M candle reclaims 1.3425 after entry. Strategy 3, the session swing, trend alignment. This is the trade that captures the multi-session move if the daily trend persists. The bias is bullish, so I'm looking for a breakout. Confirmation on the 4-hour chart. The trigger is a 4-hour candle close above the 1.3422 resistance. That close must be clean, not a wick through. Once we have that, the breakout is validated. Entry is on a small pullback to the 1.3422 level, which now acts as support. So entry at 1.3425. Stop loss is placed below the daily structure at 1.3365, which is the pivot and the area of the previous consolidation. That's a 60 pip stop, but it's below the 1.3380 demand zone. Take profit 1 is the daily R3 at 1.3441, conservative, quick 16 pips to bank some risk. Take profit 2 is the stretch target at 1.3500, the psychological big figure and next monthly resistance. That gives a risk reward of roughly 1 minute and 2.8 seconds overall if you run the full position. Trailing stop rule. Once price reaches halfway to TP1, which is around 1.3433, move your stop to break even. This swing is invalidated if we get a daily close back below 1.3327. That breaks the higher-low structure and flips the medium-term outlook bearish. That's the level that changes everything. Strategy 3. The session SNG entry, 1.3425, pullback after 4 hours close above 1.3422, stop loss, 1.3365 take profit 1, 1.3441 take profit 2, 1.3500 risk, reward, 1:1.2R to TP1, 1:2.8R to TP2, runner, invalidation. Void if daily close below 1.3327, never risk more than 1 to 2% per trade. Scalps demand even tighter risk, 0.5% maximum. No positions through high-impact US session news or bow headlines. Stops are non-negotiable. This is how you survive. To trade the next big move. The pound does not forgive sloppy risk management. The single most critical level for the next session is 1.3327. If the daily candle closes below that, the entire monthly bullish structure gets a crack. I'll have an updated blueprint for you in 24 hours if that happens. Tomorrow's wildcard is the US PPI data and any fresh bow commentary. If that data prints hot, the oil-driven dollar bid intensifies and we could see a rapid test of 1.3365 before any further rally. That's your visual cliffhanger. If you want the full breakdown on trading gold, Aussie, the yen, euro, and Bitcoin, those videos are live now. Tap the end screen. Then hit the bell so tomorrow's alert lands before the open. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that matter before the herd catches on. Please always remember, scalp the noise. Swing the trend. I'll speak to you tomorrow.